Welcome back to Higher Exchanges, the #1 independent cannabis investing show, where we break down complex cannabis markets into clear insights you can actually use. Here are your hosts, Jesse Redmond and Morgan Paxhia.
Welcome back indeed. I am Jesse Redmond, Chief Strategy and Investor Relations Officer at an amazing company called Leaf Brands. And I'm here once again with the smartest cannabis investor I know. He is the co-founder of Poseidon. His parents named him Morgan Paxhia. Morgan, what's going on, man?
I'm doing great. That was a good... You caught me off guard there, but yeah.
I try to switch it up every week. Otherwise, it just gets too dull. So throw you off a little bit, keep it interesting. How are things?
Oh, good. I was on the road earlier this week and out in a different market. Can't talk too much about it publicly, but it was cool to be checking out something very different from cannabis, something tangential with one of our cool companies. So that was a lot of fun and learned a lot about a whole nother sector that, there's parallels or rhymes to so many different things, but it was great to meet with very large industries doing very different things, but how, there's still is applicability to what we do here.
Yeah, absolutely. Well, that sounds fun. Got yourself a good tan there. Our guest is with us as well, and our guest is pointing out that you had a fantastic tan. He was asking if you were skiing, and I thought you were probably out on your sailboat. Did I guess that correctly, Morgan?
Correct. Yeah, spring is in the air in Southern California. It's already 74 here today, and it's been a great few months. So yeah, try to get out and get that vitamin D.
Nice. Well, let's not waste any time. We have a huge guest today, one of our favorites. He's Boris Jordan. He is the chairman, and also he is definitely the CEO of Curaleaf as well. Boris, welcome back to the show. Thanks for joining us.
Great to be here, guys. It's been a long time, and it's nice to regroup again.
Yeah, it has been. I think we were speculating it's been at least 12 or 18 months, probably longer than 12, at least 18 months or so. I think it's your third time on the show. And I think, Boris, it's your first time since we switched over to video as well. We used to do the old Spaces thing back in the day.
Yep. Yeah. Do they even have those anymore?
I don't see many on the cannabis side. I see some of the crypto guys doing them. So I think the functionality exists, but it feels like it kind of went the way of Clubhouse. Do you guys remember Clubhouse back in the day, like during COVID?
Twitter destroyed Clubhouse, didn't they? They copied them, and that was it.
Yeah, no more.
Yeah.
Well, Morgan, I'm excited to dig in. But before we do that, do you want to tell me about some awesome dispensary software out there?
Sure. Well, big thanks to FlowHub for sponsoring these episodes. One thing I respect about FlowHub is that they're not just a platform; they're out in the market, at events, meeting retailers face to face. Coming up, they'll be on the ground at Hall Flowers Ventura and the Exchange in Oregon, which is March 18th and 19th for both shows. So if you're at either show, go find them. These are people who actually care about your store performing. So thanks to FlowHub.
Great. Yeah, I'm going to head over to. You're probably not going to Hall Flowers in Ventura, are you, Morgan?
No.
Yeah, it's only a half hour or so for me, so I'm going to roll over there, see some of the brands we work with, see some friends, and at least spend next Wednesday out there. And I was chatting with Annie at FlowHub, so hopefully run into her and say hi to Kyle and the team over there as well.
Fantastic. Yeah, I'm sure it'll be great. I've got some portfolio specific stuff going on next week that will keep me from venturing up there.
Yeah. Well, let's jump into it with Boris. And man, Boris, I don't know if this is the worst topic, your favorite topic, or somewhere in between, but we are in catalyst season, and we're going to have thousands of, I don't know if they're angry, if they're frustrated, if they're impatient cannabis investors out there. We're all just waiting for something to move on rescheduling, Boris. So let me start off with probably the biggest headline out there, which is, what are you hearing? When do you expect it to happen? Do you still expect it to happen?
Well, great question. First of all, I'm surprised there's still cannabis investors. It's been a long time since, except on the debt side, that I've had a meaningful call with investors on the equity side of the business. But for those that are out there and those that still do believe, listen, I do believe it's going to happen, and I think the risk that it doesn't happen is very, very low. The question that I can't answer is when it's going to happen. I think there's a lot going on in the administration. I think there's a lot going on at the DOJ. As you all know, we are very much as a group involved. And I can say, the only thing I can say to you is that everyone is working on it. There's no such thing as, there's a lot of discussion at every level of the government that's involved in this decision. There's a lot of conversations on how to do it and how to do it in such a way that it's not overturned. And I think that's the big issue, because especially after the tariffs and what happened to tariffs, I think the administration doesn't want any major initiatives of theirs. And the good news is they do consider this a major initiative to get overturned in court. And so I think that that's what the DOJ and the DEA and the White House are all working on. And so I think that's it's holding it back. But if you think about it, it's only been 3 months since, about 3 months since he signed the executive order, almost to the day. And I think that that's not a particularly long time for any government to get a major initiative like this across the line. And so without going into a lot of the details, because I am privy to that, but I'm been told not to talk about them, I can just say that they are sincerely working on this. They do want to get this over the line. The question is when they get it over the line. But I don't think there's a risk that they don't get it over the line.
And do you have any expectation about there being any clarification about things like states' rights under Schedule 3, or even more specifically, is there a path to uplisting there? Do you expect anything explicit on either side?
So explicit in the actual rule. First of all, we haven't seen the rule. If they go with the Biden rule, then there isn't anything, because we did see the Biden rule. But if they decide to make amendments to the rule, it could change it. I haven't seen them. My gut feeling says to me that they're going to tackle that separately. I don't believe that they're going to deal with markets in the rescheduling. I don't believe that that's what they're going to do. I think they're just going to address that. Would open the can of worms for lawsuits and other issues. I think they just want to deal specifically with rescheduling, get a rule that can hold on its own, not get reversed, and move forward on that basis.
And when you look out, Boris, maybe a year from now, when we'll hopefully final rules in place, what do you see as the biggest benefit of Schedule 3 to Curaleaf in particular?
Listen, I think that for the whole industry, and I truly believe this is for Curaleaf as part of that industry. It's a big big group of companies and suppliers and everyone. I think it's to use the proverbial phrase, it's breaking the glass ceiling. And I think that's very important, because of what we've seen in states, every time you get, for instance, a very restrictive medical program, a year or two later, you start getting that program is eased and eased and eased, and it becomes a very good medical program. As an example, remember, Florida was a vape-only medical program. Then they years later, they introduced flower, and the program really got going, right? So we've seen this time and time again in our sector across the country, where you get an initial piece of legislation and then it goes. I can tell you this much, that in all my contacts in the Senate, in the House, in FDA, and I've been meeting with them recently, HSS, which I haven't met with, they're all waiting, including the IRS, they're all waiting for this rule. They want this rule to happen, because right now, if you think about it, whether you're a bank, whether you're a stock market, whether you're a supplier to the industry, whatever you are dealing with a Schedule 1 illegal substance, which is money laundering, right? So you have to take it, and most companies are pretty conservative out there for the most part. Whether it's SOX compliance and all these other issues that are out there, people are pretty conservative about what they can and can't do. And I think dealing directly with companies that are, we all, because we're involved in this and our heads down in it all day, we don't see it. But for coming from the outside, we're a federally legal substance, federally legal business. And so they don't want to deal with it. This rule, I believe, will break that barrier, even though it doesn't change the legality of cannabis. But what it does is it moves it from Schedule 1 to Schedule 3. It's open to, first of all, obviously the 280E goes away, at least back to January 1st. We'll see how the negotiations go on those unpaid tax liabilities. But I think more importantly, it opens up, for instance, senators have told me, we won't even look at safe banking until this is rescheduled. Pennsylvania has said, the Republicans of Pennsylvania said, we won't even look at legalizing cannabis unless it's Schedule 3. So there's a lot of people that are waiting for this to happen, and I think that will get the ball rolling, and I think we'll see a lot of initiative in the sector on the back of the rescheduling.
Yeah, Boris, you mentioned the unpaid tax liabilities, at least going from wherever the line starts, addressing that. Do you think, or do you have any insight, is that going to be a one-off negotiated company by company on those past liabilities, or do you think, how are you thinking that's going to be addressed?
Boris Jordan's view. This is not based on anything. This is my view and my experience. I think that the government will negotiate one approach to it, and then each individual company within that approach will negotiate their specific reschedulings, restructurings, or whatever it is, right? So I think they'll negotiate whether it's a discount off that amount, right? And there's different things that are being discussed about. There's things about, going back to Rohrbacher and saying all medical should never have had 280E. There's that kind of discussion. There's a discussion going on. Let's go back to 23 since Health and Human Services and FDA wrote the letter, and let's go back to that. And then let's have a X amount of discount against it. I think there's going to be one overall approach, and then each individual company within that approach will have their own conversation with the powers that be about the restructuring or whatever it is they have to do about their UTPs.
Okay. Yeah, because that's obviously something on a lot of folks' minds, whether you're a debtor or an equity holder. People are curious how that's going to be resolved, and obviously, first things first, we got to get rescheduling done. So before we can move on.
The good news, Morgan, is that if you look at the IRS, and I've had to deal with them obviously over the years, many times in different sectors, their goal isn't to bankrupt companies. Their goal is to get paid, right? They have to collect taxes. So they're pretty, although they can be firm, they're pretty open to having conversations with companies to structure their liabilities in such a way that they can actually realistically pay them, and at the same time continue to function as an ongoing concern so that these businesses can continue to prosper and pay taxes going forward. That's the role of the IRS. So I'm pretty, I can't say I'm optimistic, but I'm pretty open to the idea that I think these conversations will be constructive.
And you mentioned safer banking earlier. That is one of Morgan's trigger words. So I have to play a sound effect for him, Boris. He has a lot of trauma around safe banking, as we all do over the last decade, right? So
damn it! I don't allow that word in my office anymore. So it's a good thing my door is close to the office, because if somebody heard me talking about it, they'd say, "I thought you said you weren't allowed to talk about that anymore." Yeah,
I'll send you the sound effects so you have it handy there, Boris. But it does sound like you are. I don't know. I'm not going to ask a leading question. What do you think are the prospects of safe banking at this point?
Listen, I think, as I said earlier, that once we get rescheduling, I think that at least we can get I'm not worried about the House. The House has passed this many times. I'm worried about the Senate, right? Mm-hmm. And the Senate, even though I think they've been disingenuous, most of the senators with the sector, I do think that they will at least take this to committees, and I think they'll take it to a vote. Whether it passes or not is a different issue. But we couldn't even get into committees or into a vote in the Senate, right? Because, Schumer and McConnell were stopping it every time. I do believe this time it will get it. I also think that on the back of the debanking bill that Trump is pushing through the House right now, I think that this is a major issue of debanking as well. And so I do think it's going to get a fair hearing. I can say that a friend of a friend plays tennis with a very important person on the committee. And that very important person in the Senate Banking Committee said that they've received indications from the White House that they would like them to take up safer banking. So that's all I can say. I think they will take it up. But again, when and what timing, I have no idea.
And did you see the news yesterday? You probably, aren't looking over the X news as much as some of us are, but there was a post, was it yesterday, the day before, talking about the potential for a descheduling committee this summer. Have you heard any rumors of that? Does that sound consistent with things you've heard from the Trump admin before?
So I've never heard that. As a matter of fact, it's my personal view in the interactions I've had that the president is adamantly against descheduling. Mainly on the following basis. He believes that the research needs to be done on the plant, which is why he wants to reschedule, to determine what are the benefits or the the harm of using this plant in whatever form. And I think that they won't look at it until, I think once that happens, it'll take at least 3 to 4 years to do that work before they can consider it. So it'll be a different administration. Now, by the way, I don't know about this rumor. I haven't seen it, but what I can say to you is that if they do something like that, set up a committee or something, it would literally be to discuss it. But I don't believe it'll happen until the work of the FDA and Health and Human Services will be done. And that work will take time, right? They're going to give grants to universities, hospitals, other organizations to do the work on these on the cannabinoids. Now, a lot of this work has been done in Europe and in Israel, but the U.S. wants its own work done, right? It doesn't want to use data from other countries, and so they want it done here. And so I think it'll take some time before that conversation will be realistic.
So what do you think at this point is a fair expectation for cannabis investors to have for the, call it the back half of, Trump's term, take it from now until finishing? If you're a cannabis investor, how would you set some baseline expectations about what's reasonable progress to expect over the next, 2.5 years or so?
Listen, I do think that we'll get rescheduling, and I think we'll get it before the midterms is my view. I do. I think we'll get it before the midterms. The banking, I think we can get. So on the back of that, I do think you'll get constructive conversations with the IRS. So there'll be there'll be some transparency on balance sheet risks going forward after the rescheduling, right? Because I think that companies will quickly get into discussions with the IRS, and I think we'll know where these companies stand with the IRS in terms of their UTPs. So that I think is a positive, because I think that, let's be honest, everybody yells about exchanges. Exchanges are important, but companies buy, BlackRock invests in Nigeria. They invest in South Africa. They invest in all these exotic markets. The exchanges there are not much better than, for instance, Curaleaf trades on the TSX, right? TSX is a major exchange. The real issue is, I think, first and foremost, investors don't want to touch it for 2 reasons. One is this absolutely uncertain liability that grows on these balance sheets every single year for taxes, so they can't determine what they're buying, right? So that's very important. So you have to bring some level of finality to that issue. The second issue, I think, is the fact that a lot of the large investors are concerned about, the sectors. It's a good sector, but it's not big enough where you're going to make billions as an individual fund, but you could get fined $1 billion if you're investing in an industry which is, money laundering under federal legislation. So I think they need for some of these risks to go away. So they need some safe harbor language, or at least they need on the back of rescheduling, they need some guidance from both FinCEN and the DOJ as to whether or not they can invest in the sector. And then I think you'll get some of the larger funds to start participating. Listen, the hedge funds might jump in before them because they can, and they're happy to take those risks. But those people that are managing half-heartedly money, which is pension, federal-based regulated money, they have a significant risk in doing that. So they have to wait until they get some guidance. And I think that guidance will take some time. If the Trump administration is super fast, it could happen before the midterms. But I'd be happy if we got the rescheduling by the midterms. And then on the back of that, in the last 2 years, I think we will get action on taxes. I think we'll get action on banking. And I think we might even get some action on markets. So I think this should be an active period once we get the rescheduling. But I will say to you, we're going to talk later about our bond, but I'll say to you, the demand and the kind of investors that came into our bond weren't even looking at our first bond. So that show you that there are large money center type investors that are starting to look at the sector and actually committing dollars to the sector, which did not happen even in 21 when we did our original bond at an 8% yield, because at that point in time, investors didn't want to look at it. So I have to say, I'm encouraged. I always feel that debt investors are always ahead of the game compared to equity investors, and they lead. And the fact that these types of debt investors were looking at these deals, I think and investing in the deals, I think is a sign that better times are coming.
Yeah, they always say, debt leads credit leads equity, debt leads equity. Credit guys are the smartest in the room. Makes total sense. I was always an equity guy.
Me too. Maybe that's why we got in too early, Jesse.
Well, it's hard to have a policy kind of discussion without thinking about what's happened in hemp in the last, several months. And, Curaleaf has participated in the space, right? You entered the space, what was it, back in 2018, pulled back out, and then came back with some THC drinks, right? In 24, but are you still doing that, or has that been?
So no, we're winding it down.
Winding it down.
So I looked at the returns based on the legislation that came out and what I think is going to happen. And I just said there are, even though, as everybody knows, I've been talking about beverages for years, way before anybody got involved in them. I thought, and I still think, that beverages will account for 50% of the cannabis sector, because beverages is a consumable that Americans love. We do it more than anything else. And I think we're also seeing the dramatic drop off in alcohol. I can tell you, I'm one of those people that have just stopped drinking. And because I just, at 60, it makes me feel bad. I don't want to feel bad. I want to feel healthy. I want to get up and go for a run, ride a bike, or do whatever. I don't want to be, have a headache. So I think more and more people are moving in that direction. However, this piece of legislation, I do not believe is going to get reversed. I think there's a lot of people, there's a lot of wishful thinking that there will either be an extension or that this will get reversed. I believe it will, but not this year, and most likely not next year. So then I had to consider, where is my very expensive capital, as we just saw me raise? Where is the highest returns on that capital going to be? And it's not going to be in a fragmented market where I have to, manufacture these products in each state, because it's going to be like cannabis, right? It's going to be the same thing as cannabis. However, beverages are a very different play than cannabis from a distribution perspective, from a cost perspective. Dispensaries don't really, have refrigeration that's proper to do it. So I made the decision I'm keeping all of the formulations. We were about to launch a whole bunch of new formulations. I'm keeping all of that. I'm even keeping the team of 3 people that developed all of our drinks and everything. I'm keeping them on staff, but I did shut down the business, and I did liquidate and write off the inventory. We're selling some of it now, but I wrote it off because I just don't believe that it's a smart place to allocate capital in the current environment. And I don't believe that this is going to get reversed, at least over the next 2 years. I do believe drinks will come back. I do believe eventually, when the alcohol companies are ready, that this will happen. And I've met with the alcohol. I didn't do this just like that. I met with alcohol lobby. I met with everybody that is powerful in this sector, a lot more powerful than we are. And I've understood through that process that this is going to it's going to take some time for this to happen. And so I made the decision to reorient the company. And thank God we were only in it for a year, so it didn't have big expenses associated with it. And so I decided to focus on the cannabis sector and our traditional products rather than getting into this until we have more transparency at the end of the tunnel about what's going to happen here.
Yeah. I am a big believer as well in beverage, just as a consumer. Like, that is certainly is a preference of mine. I mean, it's when I sit down at night, to your point, instead of grabbing a glass of wine, it is nice to have a cannabis-based beverage. But I mean, just kind of playing through that, impact. I mean, all these cannabis or alcohol retailers, they're going to lose all of those revenues that they've gained. To your point, from the slowdown in alcohol consumption, they were able to supplement it with the THC beverages. But, even without a stay or without a carve out, that's all going to go away. And so to your point of, like, there will, and I do understand that alcohol doesn't care. They have no problem if this goes away for a bit, and then they can bring it back the way they want to. Do you think it would survive in a hemp channel so that it would be able to go interstate, or, would it really be more like confined to the intrastate like cannabis?
Well, right now, these hemp-based beverages are, as of November, are going to be the same as cannabis, right? So they can't go intrastate. I mean, I think there'll be people that will do it. I think there'll be people that violate the rules. We can't do that as a company, but I think that private companies, different types of entrepreneurs, and there'll probably be, I don't know what level of enforcement. But listen, I think we have to go to the root cause. The root cause of this problem, and I was very much engaged. I wanted to go ahead. I didn't lobby against hemp. I never, I wasn't one of those people that wanted to kill the sector, but they did it to themselves, right? They started selling crap on the shelves, dangerous products. And I started to get concerned that someone's going to die from this stuff and they're going to blame it on the cannabis industry, right? And that was my real concern about this. And they did it to themselves. There was no self-regulation. There was no self-control. They were buying synthetics from China. I mean, it was a free-for-all. And they let's be honest, they were marketing to children. It was a problem. And I think that I took a pulse of the Senate. It's even Democrats. It's not just Republicans. It's Republicans and Democrats that don't want to see that come back. So I think what they want is they want the FDA and the Health and Human Services to go away. They want them to come back with a framework on how this is going to work. And I believe they will. And I believe drinks are probably one of the safest products, to be honest, probably safer than smoking and vaping, in my opinion. That one of the safest. I think this form factor will come back, but I think it's going to take some time, and it's going to be under a very different framework. And I then have to consider, can I compete in that framework, right? Because if the alcohol companies come out and they build it for themselves, it may be very difficult to compete with that on a mass scale, right? You can always have craft operators. I'm not saying craft, there's always a world where craft works, but Curaleaf's not playing in the craft category, right? We're trying to play in the mass market category. So from our perspective, we have to sit down at the time, evaluate what comes out, what are the rules going to be. We hope to participate in those discussions when they start to happen for real, not that what's going on now. Now it's just a bunch of, hemp farmers. And by the way, I'm very sympathetic, very sympathetic. It's a wipeout. It's a terrible thing, terrible. But I think that not the farmers, but I think the product producers brought this upon themselves, and they only have themselves to look at to see, why this happened the way it did. And hopefully they'll learn a lesson, and next time they'll behave differently as the market comes back. But I do think it's going to take years, not months, for this market to come back. And there's no way that they're going to reopen this thing for another year. Listen, I'd be happy if I was wrong, but I'm telling you, I've taken a pulse on this. It's not going to happen.
Yeah. Well, and to your point, the farmers weren't even benefiting if they were sourcing from synthetics from overseas.
Right.
But certainly sympathetic to the farmers for sure. They've just been getting whipsawed for years now and trying to do different crops. I know on the industrial side, it's much more stable. That has a much clearer path, and we work with a lot of farmers in the U.S. that grow for industrial purposes, and it seems like they're even improving or trying to make it even more accessible for farming without so many hurdles to jump over when you're growing for true industrial purposes. One last question for me, I'll pass it over to Jesse, is does this make you more or less or no change of your bullishness or not on cannabis beverages? I know you're mentioning, I understand the back end doesn't really work for cannabis with retail, with distribution, but as a form factor, is this an opportunity where cannabis beverages could actually get some meaningful market share while we don't have clarity on the hemp side?
Well, we have to see, right? Because at the moment, state by state, there's very different initiatives that are taking place. Some states are shutting it down altogether. Other states are allowing it to go forward. The problem, Morgan, is going to be the cost of production, right? Because these products, right, this really requires, in all the analysis we did, and why it took us a little longer to get involved, is we were looking at it. This really has to be manufactured in maybe 1 or 2 facilities around the country and then distributed. To build or to even work in facilities in every state to distribute it, I don't think you can get the economies of scale to be able to do it. So maybe some people will do it, but it didn't make sense at the moment for Curaleaf. But I will say that the only benefit from this whole thing is that if you take a look at, and this has been my thesis for a while and nobody was listening, I never believed that the stagnation we've seen in the cannabis industry had anything to do with overcapacity in the cannabis industry. I've always been saying that I think it's because of the hemp proliferation. And I think that what you're going to see is a return to growth in the cannabis sector, regulated cannabis sector, on the back of this this shutdown. Again, I'm not I don't mean I don't want to see anything bad happen to anybody, but the one benefit which we could use, we haven't had one in a long time, for our industry, is that this will bring at least 50% of the consumers back to, of those consumers that are using hemp products, back to the regulated industry. And my analysis is that it should affect the end of this year, the second half of this year, with about a 5% national growth number. And I think next year it could be somewhere between 10 and 15% growth number, organic growth in the regulated cannabis sector, on the back of the return to the sector of a certain portion, not all, but a certain portion of the customers that were buying the hemp products on the shelves of these bodegas and I'm talking specifically about, vapes, flour, gummies, those form factors, rather than beverages. I think the beverage consumer is a very different consumer for the most part. And I'm not sure that those are going to be ones that come back to the regulated sector. But I do think those that were buying flour, vapes, and gummies are the same consumer. And I do think that they will come back. At least a portion of those consumers will come back to the regulated sector. And I think that will revive growth. Everything we're seeing now as Curaleaf, we're seeing I'm adding capacity in every state. When I became CEO in August of 24, 50% of Curaleaf's capacity was shuttered. Today, we're at 110%, and we're adding capacity in every grow. We're reopening grow facilities that we shut down thinking they were never going to be functioning again. Our original grows that we built 15 years ago or 10 years ago, we're reopening those grows now and refitting them for them to operate because we're running out of capacity. And I think that has to do for two reasons. One is, and I know we'll get into that, price compression. So you have to have more volume to cover the same sales. But the second is the hemp buyers are starting to slowly filter back into the cannabis sector. And we're seeing very robust growth in our sector. We saw it in the fourth quarter. We're seeing again, we had the best January we've ever had. Okay, and January is usually the worst month in the cannabis sector by a mile. And we had the best January we've ever had from the time, even before COVID. So it's a very positive sign.
That's really interesting. One of the things we've been talking about over the last 3 months, Boris, is there's been a lot more conversations going on behind the scenes, more open conversations around financing deals, people just getting stuff done. Like the stock prices have been, disappointing, volume's been low, interest has been low, but the conversations between operators, between banks, it feels like those really started to heat up, maybe starting in last December. And we've seen a lot of the largest operators now, including yourselves, taking proactive moves to make big financing rounds ahead of rescheduling happening. So congratulations to you guys on the $500 million at 11.5% expiring in 2029. I'm curious, Boris, what were your thoughts on getting this done now versus waiting for a final rule and maybe some lower rates down the road?
So believe me, I didn't want to do it now. I had to do it now because my loan was up in December of 26, and as you know, it flips a year before the loan is due. It flips into short-term liabilities, so that would have made the balance sheet. We were fine, but it would have made the balance sheet look pretty bad, right? So I didn't want that. I want to have a strong-looking balance sheet, and so I decided that it was time. I held off. I originally was supposed to do it in the fourth quarter. I held off until the last moment to go to market, really till January, because I had to get it done before the earnings for it not to flip. And so I waited because I did think that we might get the rescheduling. And then, I thought at least demand would be higher and therefore pricing would be better. Even though obviously interest rates have moved dramatically since we did the original financing, right? It's up almost 450 basis points from where interest rates, Fed funds rates were when we did the financing at 8%. So I waited and I couldn't get it. I had to get it done. So we went to market and we had an incredible amount of investors. The banker told me it's the most investors that ever looked at a deal. And this is a banker that's done every debt deal in the sector. Said this is the most amount of investors that have looked at a debt deal since the sector has got started. So looked at it. So that's a very good sign, right? I'm not saying they all invested, but the amount of people that looked at the deal and actually downloaded the documentation online and went into the data rooms was a record amount of investors. So I see that as a positive sign. I think that helped us because of the EO, right, the executive order. I think that really helped. And I think that most of the financings that are being done right now, most of the conversation with the bankers, Jesse, is really M&A related right now. And the only financings that really are being done, except maybe in your case, which is good news that you're going to be able to raise for a concrete investment, but most of the financings are refinancings, right? I don't think anyone is out there raising new capital because they need it for something, because it's expensive, and it's everybody's waiting for rescheduling to happen because they think they can get better terms. But there certainly is a tremendous amount of refinancing, and there's also a lot of M&A talk. So everybody wants to consolidate. Everybody understands that this sector is about volumes, and that they need to consolidate. And I think you're going to see a massive wave of consolidations in the next 6 months, like 6 to 12 months. And when I say massive, I think it's already happening. I can tell you right now, there's about 4 deals I know that have happened in the last 2 months that just haven't been announced yet, but will be announced shortly, that are, they're happening.
Yeah, it's an interesting time where there's a lot of distressed situations out there / low valuations. A lot of them are frankly distressed. And really interesting times, Boris, if you're cashed up a little bit, but also if you have some levers to pull to make those situations work. And so, maybe, for a leaf where we make, concentrates in California and have a nice low cost advantage with our farm here, we might be able to take a vape or edibles brand that wasn't working with them buying third-party inputs. When you plug in our low-cost inputs, all of a sudden that business becomes profitable and works. So I bring that up as an example about the way that could work for Leaf. Now, sitting in your seat, you have a lot more levers to pull, whether it's on the cultivation side, on the retail side, the distribution side, on the brand side. There's a lot of creative things you could do. Plus, you've got a good chunk of cash there. Anything specific you're excited about, whether it's examples of levers you could pull to make something work, or a particular part of the portfolio you'd like to build out a little bit more?
Listen, we're definitely looking at expanding retail. So we are looking not only opening up our own in those states where we can, but we're also looking at tuck-in acquisitions in those states where we have enough capacity to be able to supply those stores, and where margins are still very strong. And so we're definitely looking at those kind of acquisitions, but we're also looking at bigger deals for the first time in years, right? The last 2 years, I told everybody, just like safer banking, I said the other word that can't be used is acquisition at Curaleaf, because I really needed to fix the company. I needed to write it. I needed to get, focus on the products, focus on the quality, focus on the branding, focus on the distribution, not on M&A. And I feel like we've gotten there now. I think the company's on a very strong footing. The results are getting better every single quarter. And I think it will continue throughout this year. So now, for the first time in 2 years, I feel the company is ready to start looking at consolidation deals. And so I think that there's opportunity for Curaleaf to expand its U.S. platform and look at deals. And the good news is that if the deals are relative value stock for stock, then it's not as dilutive as one might think it is, right? Because it's a relative value deal, right? So as long as it's a good deal for the company, as long as it's priced properly, I think that these deals can have a very significant impact. So cash deals are I think more, nobody has enough cash to do big deals. I think people have cash to do tuck-ins. And definitely cash is being used for tuck-in acquisitions right now. And I think there's going to be more and more of them done. And I think you're going to be hearing them almost every month over the next 6 months. You're going to hear, somebody bought, because there's companies like, listen, PharmaCann, all their assets are for sale. A lot of AR assets are for sale. A lot of these mid-tier MSOs are for sale right now by whether it's their creditors or shareholders or whoever it is. And I think that there are transactions that are taking place now. And I think there'll be more transactions that take place over the next 6 to 12 months in that sector. But I also think, interestingly enough, that you might see some transactions even in the top level of MSOs.
Yeah,
the logic is the same even between the top MSOs as it is with the tuck-in smaller transactions. The logic is there. It's about velocity volume and bringing your costs down. I mean, just think about it. You know, a Trulieve and a Cresco, or maybe Cresco's the wrong one, but you know, a Verano or a GTI, they operate in a lot of the similar markets. They you know, why have double the senior management structures, the corporate structures? Why have double the local management structures, double the sales force? You don't really need that. So the synergies are amongst the MSOs could be quite large. I mean, when I looked at an MSO deal a few years ago before this whole thing fell apart, the synergies there were, you know, $150, $200 million. I mean, that's real money, you know?
Yeah, that's super interesting. Morgan, we got about 15 minutes left. We definitely want to hit the fundamentals. That's what you do best. So let's go.
The fundamentals, yeah. You know, the Q's out now in the K. Was great to see. International was a huge contributor, up 65%, right, year over year, to 51 million. Obviously, domestic is still pretty muted for reasons that we were discussing earlier. You know, I was just kind of curious, as you know, Curaleaf is this global company at this point. How do you balance, you know, the U.S. and talking about, like you were saying, with some of this allocation there and what you're doing overseas? Like, how do you kind of think about Curaleaf? And especially thinking about it from like a capital allocation strategy,
Yeah.
And where you see those, you know, those returns.
So firstly, the European markets and US markets are vastly different, and we operate the two companies completely. The only thing that's integrated in those two companies is the operations. Growing ops and manufacturing is integrated and run by one team. But the front end is completely different because the European business is truly a medical, almost, to be honest, pharmaceutical. We operate under specialist medicine licenses. We're doing, for instance, human trials in the UK. We just got through stage 1 of a neuropathic pain medication. We sell all our products through pharmacies, not through dispensaries. So it's a very, very high pharmaceutical, or, you know, where we have to manufacture. It's all clean rooms. It's, you know, it's a very different than the US cannabis industry, right? It's a completely different business. And so we do run it differently. It's growing very quickly, as you said, right? We are allocating, but the capital allocations to the international business outside of the original allocation that we made when we bought it and made the original investment are not as big because the European business functions like a normal company where, you know, we can manufacture centrally, we can grow centrally, we can distribute through all the countries, right? So I don't have to build these elaborate, very expensive facilities in each one of the countries we operate in. We're able to do it centrally out of it so happens that our main manufacturing and growing operations are in Canada and Portugal. And then we have distribution sites in the UK, we have distribution sites in Germany, you know, Australia, Poland, other places. We also have clinics in some of these countries because it's a medical market where you're allowed to have clinics, telemedicine platforms, things like that. So it's a very, very different business, but it doesn't require as much capital as the US business did. So to give you an example, in 2026, I think we're spending 16 million in Europe, and we're spending, you know, 50 million in the US on CapEx. So the CapEx in Europe is lighter than it is in Europe. Obviously, the upfront investment was substantial. It was almost $425 million between the acquisition of licenses, the building of the original facilities, the whole thing. We probably, you know, spent about $425 million. But now the CapEx is quite low in the European business, and we don't see a real reason to have to increase that dramatically because we have extra capacity in those facilities in order to be able to supply markets. Plus, we can buy in. That's the other great thing, right? We don't, in Europe, we buy a big portion of our products from third parties. So, you know, we have that. So the supply chain is very much similar to what you'd have in tobacco or in other areas where you don't have to own all your grow operations. You can contract out your genetics. They grow your genetics, they supply you with them, and then you distribute them. So it's a very different model in Europe than it is in the United States. And Europe, listen, it's going to continue to grow. I think this year's growth rate will be a little less than last year's, only because there's some price compression and the new markets have not opened. They're opening up at the end of this year and going into next year. So we do expect accelerated growth into 27. But, you know, we'll probably have, it's still going to be double digit, it's still going to be very healthy growth rates, but instead of 60+%, it might be, you know, 25 to 30% in Europe in 2026. The US is really right now our focus because we see with the change in the landscape, and the changes in the company that I made with a massive focus on quality, we think there's a tremendous amount of upside for Curaleaf in the U.S. We kind of stagnated in the U.S. We lost our way in the 2000s. We took our eye off the ball in terms of what we had to do. It's the reason I stepped in as the CEO. I really think that we've really righted the ship. Our quality is as good as anybody else's now. Our branding is just about to get launched. And what's really nice is that what I saw in the recovery, so the fourth quarter was the first quarter where we did more revenue than we did in the previous year in 2 years. So it was our first. This first quarter will be the same. We've returned now to growth year over year in the United States. So obviously sequential, but also year over year. And that's the first time in a long time, right? We've been flat to declining in the US and growing in Europe. And now I've righted the US ship, and we're now listen, this is not going to be 10, 15% growth rates. But, I'm going to be happy at a healthy 5% growth rate in the United States in 2026, which is what I think we can achieve. And I think that will accelerate into 27 for a variety of reasons, including the hemp leaving the market. I think we'll get organic growth going into that. And this is all organic, right? Curaleaf hasn't bought anything in years. So this is all organic growth rates. And I think you're going to get a nice, healthy sort of 5% growth rate in the US this year, hopefully accelerating into 2027 on the back of the hemp changes before any M&A.
Right. Yeah. And your focus on operations is coming through in the results, right? Like your gross margin profile has been getting, I think it was 49%. And this was in the face of, the industry overall having this price compression cycle that's gone longer than any of us would like to see, other than the consumer getting, these lower prices, which is good too. I mean, obviously you see in a lot of states, the unit velocity picking up considerably as prices have come down. But if you're thinking that, returning to a mid-single digit kind of growth rate, how do you think about that from the operations, from a margin profile? Does that really help offset if there is continued price compression, or how do you think about margins?
So we have a lot of still, again, because we took our eye off the ball, Curaleaf is lucky to have some more upside. For instance, when I joined, we were growing at about 55 grams a square foot. We're now at almost 120 grams a square foot in a year and a half. Obviously, innovation like under canopy lighting, other things that we're doing in order to increase our volume. So we're getting more out of our facilities. That's obviously helping us in our margins. So that's compensating the margin compression we're seeing on pricing through efficiencies. We're also automating a tremendous amount right now in order to reduce staffing costs. That is also going to contribute. So I think there's at least 10 to 15% benefit in just operations for Curaleaf in 2026 against what we expect to be around a 9% price compression nationally in 2026. So I think we're going to come out on top of that just through our operating environment. Now, some of the other companies were already doing very well in terms of their operating metrics. We weren't. And so we're getting the benefit now. And that's why we're holding. Last year, we finished actually, I think the fourth quarter was 49. I think we finished on an annualized basis at 50% gross margin, which was up substantially from 2024. And I think that we're trying to hold that 49 to 50 in 2026. Now, we also have, don't forget, our U.S. margins are much better, right? Our U.S. margins are well over 50. It's Europe that's weighing us down. It's at 120 basis points because Europe operates at a 42, 43% gross margin, but it's still growing. And so we'll grow into that 50% margin. But the scale, we need scale in Europe, right? It's a $200 million business. So we need to get to the right scale to get it up to the 50%. So in fact, if you look at like for like, we're as good as any other great operator in the U.S. from a gross margin perspective. We're all operating, not all, but some of us are operating at around, the bigger ones are operating around a 50% gross margin.
Right. And you mentioned with the debt financing, I don't know if there's anything specific you want to cover in that, but it's allowing you this ability to go into this built for growth kind of strategy. And, how, I guess we were just wondering, is like, how should investors be looking at it? Is this, are you thinking about it from, to your point, on organic growth, or is it organic plus M&A, and that helps translate to, mid-single digits or potentially higher? When could the market start to learn about some of these, growth plans, and or start to see them? I know you can't disclose much to the public company, but just trying to.
Yeah, we'll walk through it in the next quarterly, some of our plans, but mostly I'm focused on organic. I want to make that clear. For me, that's the cheapest form of growth. We've got this enormous infrastructure that we've spent a lot of money on. I want to make it maximize it to its absolute fullest. The fact that people came back to our stores in the third and fourth quarter to buy our products based on quality, even without massive marketing support. Now, at the end of this quarter, you'll see it over the next. We have a big event next week, and where we're relaunching Select with a brand new, very high technology vape. Next week, you're going to see all of our brands. We're changing the brand infrastructure. We're going to tier it from very high quality down to medium, low quality. So we've redone all the pricing. So I think you're going to see, with that support on the back of the quality that was first. I didn't want a brand before I had the quality, because that's a waste of time. So you have to get your quality right, and then you have to get your branding right. I think there's a good amount of upside for Curaleaf this year, and my focus, let's be honest, at the moment is 26. It's just the way things are, and I feel good about 2026 for Curaleaf. I feel good about the domestic growth rate on an organic basis, but I can't ignore, at the same time, I wish I had another year. I can't ignore what's going on in the sector, right? My competitors are out there being pretty aggressive on the M&A front, and I don't want to be left behind. I want to continue to play at the top league of the game, and so and I'm glad that the company's now in a better position. If we had to do something, obviously I'd like to have another year where I could just focus on the organic, but I do think that we're probably going to be forced to, especially while the pricing is still good, to do some tuck-in acquisitions in 2026 in order to boost some of our presence in the States to compete against some of our colleagues. Yeah.
And keep me honest here, but the retail mix versus wholesale in fourth quarter, you did 221 million in retail and 61 in wholesale.
Yeah. So our wholesale right now is around 29%, but that includes Europe, where a lot of the business, our U.S. wholesale is only 21%. And that's the fastest growing part of our portfolio. We're having a very strong first quarter. Again, when quality comes back, people want your product. And so we're seeing very, very strong resurgence of our wholesale business. 4 years ago, Curaleaf's U.S. wholesale business was around 30%. Under some failed management and some failed, approaches, we fell down to, almost 10%. And now we're back after the year and a half I've been here, we're back to about 21, 22%. But our goal is to bring that up at the end of this year to around 30% in the US. So altogether with Europe, it could look around 35, 36% of our business could be wholesale.
Okay. So that's a pretty good driver for growth for you all, is expanding the wholesale. As you're saying, you're at a capacity, and yeah. And
New York is the biggest opportunity, right? Where you probably read all the articles. New York is very, very strong. We're the largest operator in the state, and we're seeing stores opening up. I think we're going to get to 900 stores. It's almost California type, proliferation of legal stores. And there are estimates. Again, I haven't run the numbers myself, but there are estimates of $4 to $4.5 billion New York market. But I mean, the fact that we'll probably end at an over $2 billion run rate at the end of this year is realistic. I mean, I think we end at a $1.5 billion at the end of the year. I think we'll be well over $2 billion at the end of this year. So, I mean, that's basically 50% of the California market. So that's already becoming significant.
Yeah. And the frustrations of California we can save for another show.
But getting healthier. I own, Jesse, I have a big stake in a company that's similar to yours that does what you guys do, outdoor farming. It's Raw Garden.
Oh, cool.
I've been a shareholder of theirs for years and years and years. I have to say their numbers are really turning around. They're doing exceptionally well, and from a very difficult position a couple of years ago. So I'm seeing the California's coming back, and it's getting a little healthier. I know that's got a lot of problems. I follow Elliot from Catalyst online. I get a lot of my. I know he's a bit. He's you either like him or you hate him. I kind of like him. I think he's interesting the way he's built that business. I've never met him, but I'm at least from what I've seen. But even he seems to be indicating that it's getting a little bit better in California.
Yeah,
so
he's very entertaining. But I agree, though. I mean, all of us. I mean, Jesse and I are here in California. Both have Jesse's obviously with Leaf, and for those that have been weathering through, it does seem like it is getting better. I agree. I mean, California is also kind of getting better. San Francisco with all the AI benefit. We're seeing just more stabilization on a macro scale, which helps the cannabis industry.
Absolutely.
So last question, I'll pass it back to you, Jesse. I know we're coming up quick on time here. What would you say is, what do you wish people asked you more often about Curaleaf?
Listen, I think I've been happy actually that nobody's been asking me anything for the last year and a half. It's allowed me to focus on the business and not on doing a lot of interviews and talking. Listen, I think the biggest misunderstood aspect of Curaleaf, there's one that was definitely understood, and that was we lost our way in the U.S. and now we're coming back. And I can promise our investors and consumers we're really, really back, and that's been a big, heavy lift. And so that I feel very good about. But I think the one misunderstood is actually Europe and the value. I mean, if you just take a look at the transaction that was done by OGI and British American Tobacco with Sanity, that values, and it's interesting, that values Curaleaf's international business around $957 million. And what's interesting about that is that we recently had a money center bank, because in Europe I can work with money center banks, right? Because we don't have a problem. We're working on an M&A transaction. We had a money center bank value us at 800 to $1 billion. So it's interesting that, and that was done before this OGI deal came out. And then this OGI deal comes out and right smack in the middle of that range, or close to back to the higher end of that range, came out the transaction. And I think that many people don't, because let's be honest, we all know that a lot of US investors don't look around, particularly cannabis investors, don't understand the global play. They understand the US play very much. They don't understand the global play. And I think that that's very much mispriced in Curaleaf, because if you think about it, we're a $1.8 billion company right now. And we have a $1 billion asset that people just don't understand the value of that asset on our books. And I would say that's on me. Maybe I haven't done a good enough job explaining it, but frankly, I haven't felt recently that there's been anybody to explain it to. So I've kind of just been focused on building it. And I feel like the time will come, investors will recognize that value as more sophisticated investors get involved in the sector, and it will get revalued. But I will tell you what the few, and I want to quote it, the few large investors we do have in the cap structure, that's what they like about Curaleaf. They're at Curaleaf because they think that's a massive growth story. And, investors like growth. And if the US business, is running without M&A at sort of, 5% type growth rates, this is 20 to 50%, 25 to 50% growth rates. And with every new year, you've got more countries that are coming into the space, and we've got all the infrastructure to take advantage of it. And so I think that's the one thing about Curaleaf that is misunderstood in terms of the company.
Well, awesome, Boris. This was a great return visit. It's been too long, and you dropped a lot of good insights and knowledge. So thank you very much for taking the time today.
Thank you guys for having me. I appreciate it.
And thank you to FlowHub for making today's show possible. FlowHub powers some of the best dispensaries in America. Whether you're Boris running 159 stores or you just have one dispensary, you're probably leaving money on the table. See what's possible. Go over to flowhub.com. So thank you to Boris. Thank you, Morgan. Always appreciate the conversations, and we'll see you guys back again in 2 weeks. The views expressed as podcasts are provided for informational purposes only. Nothing we said should be considered research nor recommendation. All investing involves risk, including the loss of principal.